Hello, uranium friends. We're going to check in on the space here. We're going to start with the majors here. So, URA ETF, we're on a monthly chart here. Here's your Fibonacci pull from the very bottom to the very top, right? So, we talk about bull flags and things of that nature. And with Fibonacci retracements, the key on a bull flag is, does this 50% retracement hold? And now it's kind of been teetering here. So, the chances are less likely that there's going to be a bull flag that confirms here. So it's kind of lost its monthly uptrend, and now it's actually in a bit of a monthly downtrend. And we have this 200 DMA kind of holding us up here. We'll see that in most of the space on Friday, there was a slight uptick in volume as we dig in deeper and we zoom in closer. But this is what we're looking at. We've lost the uptrend. We've kind of confirmed a downtrend with this lower low and this lower high. And now we're just kind of getting a little sideways. So what do you look for? How do we know that the entry could be here? Well, we don't, right? I don't know. But what I am looking for now is a couple of things. Look, we have this volume is actually declining. All right, makes some sense. Volume has declined across the markets in general, and the liquidity has dried up, so it makes sense that the volume is lower. But it's always a good sign when you start to see the volume wane down, especially when it's in a downward thrust that we're in now. So what I'm looking to see now is, does this big line of support hold? So you can be precise, or you can just make an estimation, but we're kind of around the 17, $18 area is really what we want to hold. We definitely want to make sure that holds. If we think that we're going to get a bounce from here. If this area doesn't hold, then we're still in wait and see mode, right? So, but the first small sign that we're kind of grabbing here is that, yes, we lost the uptrend. Yes, we have a confirmed downtrend, but now what we have, at least we've made this higher low right here at 1847. And that's going to be our first sign that maybe things have not finished their little downward move, right? So if 1847 breaks down, then we have to look down to these supports. But right now, what I'm seeing is we're getting a little bit more of a sideways action. This was not a great bar for December at all, right? It's a thick bar. There's no bottom wicks on it. So it's saying that maybe there's going to be a little bit more. We don't know. But the first thing that I look for truly is I look to see, does the thing just start making sideways action? And this is any name across any specter. Um, with any time frame, right? So you want to start to see the sideways action and then see how that plays out. So your monthly, we're kind of in a sideways, and our key level right now, and I'm going to mark it. Our key level for URA is going to be 1847. That's the spot that we want to hold to say to us, in the very least, on this monthly chart, that things are starting to slow down as far as the downward thrust is concerned. Moving into the weekly, yeah, sideways again. 200 DMA is our metric here, and it's holding us up a little. It's our resistance at the moment. So 1847 again, key level, and we're going to look at the daily here because we saw this nice uptick in volume here. This is a good positive sign, but it didn't really get us anywhere, right? So again, like if I'm looking at this and I want to I want to add to my position here in URA. Well, there's a couple of things that I could do, right? So I may decide to say, hey, this is a pretty low risk bottom fish right here off this drawdown, right? So I have multiple levels of support that I can decide that I want to do. Is it going to be 1921? Leave it really tight. I mean, it's a 20 cent down move, or do I want to use this 1847? This is the decision that I'm probably going to make this week. I'll probably, this week is going to be tough. Obviously, it's a holiday week. There's going to be very low liquidity across the board in all sectors. So the uptick in volume is slightly positive. This volume profile here, you can see there's plenty of supply and demand action here. And again, literally right where this Fibonacci retracement is. Let's just go back here for a second. Yeah, so right where this 50% fib is kind of where our volume profile starts to break down. So it's we want to see this area hold. And the bottom line, The good sign is that we had a pretty good volume day on Friday, so maybe there were inflows. Maybe we'll find out in a couple days when they report if there were any inflows. The other thing that I might want to do, I could wait for a daily trend change, right, to maybe make an entry there, and I'll have a level to work off of. So maybe this gets a little bit of a bounce here, rejects, gets a little drawdown, but holds this latest low, and then gets moving on. There's your daily trend change. You're going to need to get over this number here, which is 2038, in order for that to happen. But you could see you can develop a trading plan based on something like that, right? So you could say, all right, maybe I would just wait for the trend to change. There's nothing wrong with that. You're not gonna, we're not gonna miss out on these big gains or anything. We can just wait for that change and take it from there. Okay, URNM on the monthly. Yeah, same type of deal, right? So here's your fib pull for this basically the life of this ETF. And we are dancing around the 50% retracement area. We can look at this volume profile area, and support again starts to wane on the volume profile, and we're at the 50% retracement. So is the bull flag dead? Well, right now it's basically a pennant formation. It's the likelihood of it confirming, it gets less and less the further down we go, right? So we break down under that 50% retracement area, and we could start to say to ourselves, maybe this formation is not going to confirm. We have the reverse split coming, right? It hasn't shown up yet, but this thing is gonna have its reverse split anytime. I don't know exactly what the date is there, and we'll see how it reacts with that. But it's kind of the same deal, right? We still have this 200-day moving average holding us up, holding us down rather, and it's laying right on top of this 38% retracement on the Fibonacci. So we're through the point of control on this volume profile, so we've got a little bit of support here that we could be watching. Key level obviously is 54, and that was our undercut low that we can see better on this weekly chart. Yeah, this was our undercut. So we talked about this range for a while now, and it broke bare out of this range, but it's not seeing a lot of follow through yet. Um, but it could. There's nothing that says that it can't see the follow through right now. So everything is down. We are down. We're in a weekly downtrend, confirmed because it broke through this range level here. As with most of the names in the space, you're going to see a slight uptick in volume. It's nothing to write home about at the moment. We are still just in our downward thrust. It broke out of this triangle, broke out of this horizontal range. We have a little bit of an air pocket that we're working in here now. So, the volume profile says we could see this get down. And there was a gap. There's a gap right here. So there's a gap at 59.87 to 58.87. So there's a $1 gap down here. So I wouldn't be surprised if it gets filled. But that's the deal. We like the slight uptick in volume. We're going to have the split. I don't know exactly when it gets enacted. We will see. U.Un on the monthly, better chart than most. It's held up nicely. It's really dancing around this 38% retracement. I mean, it did. Once we see these breaches, we have to say that our bull flag potential is less likely. It doesn't mean that it's not going to happen. It's just less likely. So a little bit of buying this month on this double bottom. So you have a pretty good double bottom to work off of here. If I'm a trader and I want to position up and I want to keep it tight, I might look at this and say, okay, there's my stop loss area, because otherwise I know we could draw down, another buck or two. So there's a low risk setup here on this monthly double bottom. It's not a pure double bottom. It's basically, that's 14, 36, 24. So yeah, you got a 10-cent differential on this bottom, but it's there. There's a setup here for a low risk entry. I'm probably not interested in taking it at the moment, but I will keep an eye on this. So if this double bottom starts to hold, and we might get a better look at it on the weekly, yeah. So you've got some support here, but this is not This is just a strong down move, and any buying up just kind of gets rejected again. So the look is not the best at the moment for the short-term price action. Let's see if we had that uptick. Yeah, slight, but nothing crazy on the volume. So the equities, the minor equities, looks like they had the uptick more so than the actual fund itself. So it could lead you to believe that maybe it wasn't a lot of ETF buying. We don't know. We'll know in a couple of days when URA and URNM report. But that's the deal. You have a pretty good support zone to work off of if you're an aggressive bull, you could be looking at the support as something that could maybe you could set something up on your trade plan with that. Not financial advice, of course, but this is support, and you could call it a double bottom. CCJ in a monthly, again, also looks good. Probably one of the stronger names in the space, believe it or not, even though the action is telling us otherwise. But I mean, it's a volatile creature. But again, this run, I mean, we're kind of dancing around the 38% retracement. Yeah, we did tap. We actually did tap the golden pocket too. But you got one heck of a bounce. So one could actually say that you could take a fib pull from this last golden pocket bounce that was off of this original fib, and you're right there. We're sitting at the golden pocket. So if you take it off of this original run, uh, the monthly bull flag has less likely to confirm. I mean, it did make this big dip, okay, but I think it makes more sense to pull from here. And if you do that too, again, the monthly bull flag is less likely, much less likely to confirm because we're already down at the 62% retracement. So either way, the chart actually looks okay for the longer term situation. Short term right now, not the best, right? So you want to see it bounce for sure out of here if you're working off this fib pull, right? This is notorious where they bounce, and you have a lot going on here. Um, we've been talking about the $22, 21.76, I think was a deal. So the $22 fundamental floor and a $20 technical floor, and we're kind of right there in that zone. So again, this is for me. CCJ looks like a pretty low risk setup for some sort of bounce with all of this support here. The only problem you might want to say, all right, the volume profile is there's a little bit of a pocket over here, but we do have some support in this area. You do have this little support zone too, and if you kind of zoom in, you'll see that it kind of picks up a little bit. But this is the spot. Like if this area doesn't hold, then we have to start looking down into the 18 area, 19 area to see how it plays there. But for me, I'm probably going to take a shot at this week based upon these support areas, and I will stop out if 20 breaks. But I want to see what happens on Monday and take it from there. Same deal. Look, you see the sell-offs, like it gets a little bounce going and it sells off. This is the weekly. With full disclosure, I mean, I'm basically shorting CCJ almost I'm scouting short intraday trades almost every single day, and I'm hitting them. Nothing crazy, but I'm kind of trying to offset my core holdings by doing so. Yep. So to me, again, into my core holdings, I'm looking to make some sort of play here. Now we have a daily double bottom right here, so this is the key level. I want to see if this holds on Monday. Um, I suspect it's going to do the old CCJ undercut here and then get the bounce. Like again, Friday, good day, right? A little bit of uptick in volume. It was a green day, so it did this undercut on this day. I mean, this thing has just it's lost its little uptrend that it confirmed, right? So you had your low, you had your high. This ended up being a higher low, and that was a higher high. So yes, it was a dinky um, daily trend change, but it was there, and it lost it. Now, if you go to the 2-day time frame, you might get a little bit more clarity here, and that was the deal, right? So you have a 2-day double bottom now of 21.33. That's going to most likely be my stop area. I want to see how Monday plays out in the low liquidity environment, but that's what I'm looking at. I'm probably going to take a little bit of an attempt at a bullish trade here against this 2133. To me, it's a low risk play. You know, we'll see how it goes. I could even give it to 21 or just below 21. I might actually do that as my stop area because this support isn't very far away, especially on the 2-day chart. UEC had quite the day Friday. We'll dig in deeper when we get there. Let me just turn these little guys off. Hold on. UEC, it was a strange situation, but we'll look at the monthly first, and we'll see that we are in a monthly EQ. The uptrend is obviously lost, and we're waiting to see how it reacts here at 292. Um, same type of deal though. The good thing is that we still have all this volume profile support. So 292 is a key level for us now on the name. Yeah, I mean, who likes this weekly chart? Not me. But the fact of the matter is it's still in a range and it still has plenty of supply zone, demand zone volume profile here that's kind of helping it out and slowing down a big puke. Who knows? But UEC still 292 is a key level. Let's take a look at the daily because the daily had some. It was just, and we talk about this in our uranium talk video that's going to be coming out today or tomorrow as well. That's quite the volume, and right into earnings. So it's interesting. But even if you go, a lot of that volume was traded after hours, so it's probably some sort of clearing trade. We don't know exactly what it is. Broker to broker, MOC. Maybe that somebody wanted a big order filled, and the market makers were filling it all throughout the week, and they showed the closing trade at the end. Who knows? They could have just been filling an average. So that's the deal with UEC. Again, another low risk setup for me. So I want to see how Monday plays, but there's a low risk UEC entry here against 292, and it's likely that I'm probably going to take it. I don't know how big I'm going to be because it's a tough week, and I'll take it from there. But 292 is the key level. Energy fuels, UUUU. We have lost our monthly uptrend. We're kind of just chopping about sideways. Again, we're still in this volume profile, which is good. It's kind of helping us out. 539 is our next level to be watching and to see how it plays from there. This, man, my fibs are way out. Okay. So again, we talk about, how do we know if it's a bull flag? How do we know if it's a bull pennant? How do we know what's the likelihood of it confirming? Well, the likelihood isn't that very good right now because it's breached. It's breached this 50%. It's actually gotten to the golden pocket. So, you could decide that you want to do the same thing we did with CCJ and maybe move up our fib pole to this latest monthly high or low here. And it's kind of the same deal. It's well below all of that. So, the chances of the bull flag or confirming anytime soon are on the monthly chart are pretty slim. Not to say that it won't. It's just pretty slim. Weekly, again, we're seeing this is all good, right? So you start to see the volume step up a little bit, and that sometimes that helps us. But if you're looking at this weekly chart here, 539 is a really close support to be playing off of. 469 is another support to be playing off of. UUU probably, and we just look at the daily. Yeah, it doesn't have my interest for a trade at the moment because the support to me is just too far away. The only way I would do it personally, and I'm not going to do it, is if I use this Friday's low as my stop area, and that's just too tight. But we'll see what happens during the week. We'll see what the reaction is. But again, a good uptick in volume. So that's it on these majors for this video. Um, yeah, it's going to be a rough week. There's going to be very little liquidity. Most people are already out of the markets, and they're not going to be touching the markets again until after New Year's. So you're going to have a lot of whipping around, possibly. Just low liquidity, boring trading. No reason to be chasing anything unless you have clear supports and you set your stops properly. That's my opinion. This is not financial advice, but do what you got to do. Over and out.